Hey everybody, it is Sunday, May 5th, 2019, taking a look at the S&P 500, following up with a new video to get us going from Monday, May 6th, following up to a video that I posted after the close on Wednesday, May 1st. This was what we had just gone through when I posted the last video, this sell-off that took us down to a close below the 10-day, back inside this final gap that we had conquered. This was the last gap to take us up to the 2018 all-time high. And we closed back below the 10-day simple moving average. And on Thursday, that brought us in for an open right here, down a gap down open inside, back down deeper inside this gap. And we traded off on down, flushed out down to a low right to these two little halfway back points that I noted at the end of the last video. These are the halfway backs for Q2, since we started Q2 and made a new May and made a new Q2 high at 29.5413 that expanded out our range for the quarter, so we had a higher halfway back. But our halfway back for April is in the bag, and that's that 28.99 level, and that is a level that will stay constant. So this low came down, tested right in here. It came down to a low of 2900 at 2900.5 and reversed off of that, leaving, taking back the 20-day simple moving average. In this reversal off of 2900, our first clue was taking back this 2907 to 2908 level, but really it was taking back the 20-day simple moving average. And once that was taken back and held on an intraday basis with a flat, or at least just, or even if all it took was a look above it, consolidation for 5 minutes, and then boom, taking off from there, at least you knew that there were a lot of buyers perched there ready to buy that 20-day simple moving average. And from there on, we traded all the way back up here, all the way back up for a look above 29.30, but at the end of the day, we still came back and sold off a little and closed back down all the way back down in here, below the gap, in fact. So it almost looked like, a completely failed attempt to break out, and then the body of the candle here just sort of sitting in the middle of the, between two long tails, a long selling tail up top and a long buying tail off bottom. So really some indecision going into Friday's non-farm payroll. And what we ended up doing was we got our perfect Goldilocks scenario in the non-farm payrolls report. We got ourselves a gap up open. At the time, the 10-day simple moving average was right here where the open was. During the course of the day, it was pulled up and it rose. So it looks like we gapped down a little. It looks like we opened below the 10-day simple moving average. But in reality, if you were there in the morning with me during the first tweets of the day, it was a gap up open right on the 10-day simple moving average. We opened on our low and we gapped up and we just went. And that was it for the day. It was just a constant grind up all the way. We got up to a high at 29.4785, and we pulled back off of there to close just shy of a new all-time closing high. So we still do not have a new all-time closing high to take out this one that was made on the 30th. We made a new all-time high on the 1st, but sold off from there, and we still have yet to take out this all-time closing high. But it is so close, and this 29.45 strike on Friday was probably, this close was probably more about keeping things contained for OpX. You have large players in the market who's shorting against 29.50 calls, and that same large player was maybe shorting against 2900 call of 2900 puts down here. This sheds a lot of light on this volatility as well. So maybe this close, this miss of the all-time closing high on Friday isn't really like a mysterious tell that, a secret tell that we're going to roll over again. Maybe it's more just about options expiration. If we get into trading on Monday and we mess around with this 29.45 level once again, where we cannot sustain above it, this would probably be your earliest short entry that you could take. This would be probably the earliest spot, I would say, to look at puts. If you're coming in flat and you feel that we have unfinished business to the downside still, not being able to hold onto this 29.45 level and advance higher is going to be your tell. You might only get a sell on down to test into this 29.37 level, which was huge, a huge level for us on Wednesday. It's also about halfway back on the day from Friday. You might only get a sell-off down to there. The 10-day simple moving average is rising up pretty quickly. It's probably going to be right in here on Monday. So there's going to be a chance for a lot of buyers to be perched and waiting here around 29.37, 29.35 or so. So if you do come into this market short and you're underwater and you're bringing in puts from last week, and you only get a sell-off down here to around the 10-day to 29.37, that might be your spot to either sell short and turn that into a short put spread, maybe make up any losses on the trade that way, or just cut your losses if you're still holding underwater puts. Because if we cannot penetrate down through the 10-day simple moving average, we're not going for that back test. It's as simple as that. And you can see how when we are bullish, we constantly come down and test and bounce off the 10-day simple moving average. This last Wednesday was our first day that we fell below it and stayed below it, followed through on Thursday, but Friday gapped open on it and took off from there. So if you get a chance to circle back down to the 10-day simple moving average, you might want to consider switching your gears and looking for that buy signal and that reversal off of the 10-day. Buy some calls, get rid of your puts, or if you have the capability to sell something short against it, ultimately a higher strike, it maybe gets you enough credit to make up any losses that you have on the trade, and look for that reversal, and the money will be made for you as we drift up. And even if we get stuck up here and chop sideways, when you're in short spreads, it doesn't matter. In fact, sideways chop is your friend, because that's what burns premium, and you're looking for ways to burn premium when you're in short spreads, because that's how you make your money on those. Anyway, if we are to continue to the upside, obviously we've got our 29.45.83 level to take care of. We've got to get past our all-time high and move on towards this 29.60 level. There is an unresolved all-time high from ES that happened on Wednesday in the pre-market at ES 29.61.25. When you subtract out the spread for S&P, for SPX, that's going to be like a 29.60 flat is basically going to be the equivalent thereof. So this is all part of our 80 handle. We were looking for 29.50. We got it. We got to look above 29.50, and they couldn't sell it fast enough. Now let's take a look above 29.54.13 and take a shot at 29.60. If we do one of these things again, where we just take a look above 29.60 and fail, we will know we have a failure when we lose this 29.45 level and cannot make that all-time closing high. Because I will tell you this, if we make another all-time high and then turn around and sell off and cannot make that all-time closing high at the end of the day, I don't know a better sell signal around than that. That's about as clear a signal as it gets. This market is done, this market wants out, and we're going to be selling off deeper. If we make that high and we turn around and we sell off a little, but we make that new all-time closing high, it is a fool's errand to be shorting that. Other than to have a little bit of puts, just because you're the kind of person that wants to have a little bit of protection. So maybe you have 5 calls and 2 puts or something like that going on. That is understandable. But in any case, it's all going to be about making this all-time closing high. It's all going to be about what happens to us at 29.60 and if we can move above that. If we can move above that, then we have a couple of reasons, a couple of calculations for why we would get to maybe 29.78 or higher. Here I kind of took this. Let me see if I could show a little bit more on my upside of my chart here. Okay, well, besides from the 80 handle rule, which is what has been guiding us through 29.50 towards 29.60 to 29.80 and then 3,000, one of the reasons why we might be headed towards 29.79 is a certain percentage above the 50-day simple moving average, or a certain percentage level on where this whole leg started for us from 27.84. Okay, so those are some mathematical reasons beyond just the mystery of the 80 handle rule for why we might get up there. And looking at the chart all backed out here and cleared away of all of the price levels and everything, we see how important the simple moving averages are for us, but they are still stretched pretty far apart, especially the space between the 20 and the 50 day and the 50 and the 200 day. So when we lose that 20-day simple moving average, it could be a very, very hard drop all the way to the 50 day. And if we lose the 50 day, it could be a very, very hard drop all the way to the 200 day. But you know my thing, I'm looking for just a simple 90 to 100 points off of whatever our high is. So if we make a higher high over 29.54 and fail and come back down, don't make that closing high and start selling again, obviously we're going to be looking for that 2900 level to hold for us and hold a higher low against this. And if that breaks, then we've got gaps to fill and simple moving averages to consolidate at. And the next one down would be this 50 day, which is now risen up over 28.50. Here is our magnetic pull. This is our 100 point pullback would be to here to test that 50 day and maybe sit here for a few days waiting for these two simple moving averages to curl over and come down and for everything to come closer together, because when the simple moving averages get stretched apart like this, it's an overbought signal. And when we are selling off and we're down below it and they're stretched apart like this, then it means that it's oversold. A couple of other things that we should be looking for in the periphery that are going to help us determine whether we're doing well or not is what oil is doing. Oil made a high up at 29.66. I'm sorry, 29.66. I'm so at S&P 500 here. Oil made a high up at 66 and change, and then it sold off from there. This is just the last couple of days, but you can see it sold off from 66 all the way down to a 60 handle flat, and it has bounced from there. But if oil loses the $60 handle, that's going to pull the entire market down. I guarantee you that is going to make the market roll over. It is a screaming sell signal for the market because it's going to pull all those energy names down in the S&P. But if we continue to consolidate and grind higher on oil, that is a good sign that S&P is going to hold up its gains. Another thing to look at is VIX futures over here in the lower hand right corner. I'm pointing to this little 5-minute chart. You can see that we sprung up to this high at 1591 last week and then fell back down to 15 and bounced along it. And then overnight coming into the non-farm payrolls report, we slipped underneath 15, and then once that payrolls report came out, we sold off on VIX futures, and VIX futures are firmly planted down below 15. When we are above 15, that is a very bearish sign. When we are below 15, that's a much more bullish sign, and it's bullish until we get down to about $12 on the VIX futures. You get down that low, and then it's sort of like it's too good. Things are too complacent. Okay, so anyway, those are some of the things that I've been watching. And I will be watching as we wait for futures to open in about 40 minutes from the time of this video being shot. Anyway, hope that gets you a good start on the day. And I'll be tweeting, obviously, in pre-market, starting from about an hour before the market opens. If you have any questions, send me a DM. I'm always around on Sunday nights watching Billions and Game of Thrones. And I'll put things on pause and answer your questions if you're looking at the market and not looking at HBO or Showtime. Anyway, have a good rest of your evening. See you in the morning. As always, good luck and good trading.